I'm ready.
Good evening, everyone. Thank you to all the participants for joining on the third day of the workshop. And I'm sure that you must be enjoying the sessions with our Professor Ravishankar sir's immense knowledge and expert in the subject. And same thing, I would request all the participants to post their queries in the chat section during the session, whatever you are having. And one more thing that I want to announce, that is about tomorrow's session that we had on morning session, that 10 to 12 is rescheduled from 2 to 4. Right, so tomorrow there will be two sessions. First session will be at 2 to 4 p.m. and last session will be in the evening, same time, 6 to 8 o'clock. Fine. Over to you, sir. Thank you, sir.
Thank you very much. Good evening, everyone. Hope you can see the screen. So yesterday, I think we started off with understanding what fintech is about, what digital transformation means, right? And in short, it is essentially transforming the business, whether it's a business model, a process, or products, new or modifying existing ones to leverage the power of the technology. And we also try to understand why things have thoroughly moved in the last few years, right? The last 5 years, what has happened? And we saw that the growth in, number of things, right? The smartphone, mobile wallets, the adoption of cloud, the cost of storage coming down. And we also saw, the impact of these fintechs on business, and businesses are forced to transform. Acceleration happened because of COVID. Yeah. So we looked at cloud. So you probably have an understanding now, what does cloud mean, right? It is essentially data centers from on-prem moving to different parts, and it's being managed by some very large companies. Okay. Now we look at the next part of this whole puzzle is, it's not just cloud, right? Essentially, business are all about applications. Okay. And we saw on day one, right? We saw a number of fintechs come, all of them are talking about using the power of internet software, using mobile software, using, gateways, using cloud. Obviously, we look at newer things like, data and analytics and artificial intelligence. But how did it all happen, right? Just because you have cloud, how did that change, right? And what really changed is the mechanism of looking at your applications. Most of the applications were running on-prem, or there were many legacy applications. And we saw some examples how legacy are taking or moving on to cloud, right? But the fundamental change in the whole application architecture, and that's what we'll be looking at in the first part of today's session, which is API and microservices. Okay. Now, as usual, keep asking your questions so that we can address it as we go along. Okay, so what we look at is two different aspects on what is the philosophy and how architecture has changed to allow you to start building applications using digital and making it much more friendly for somebody accessing it, whether through the mobile or whether through PCs, whether now through smartwatches, whether through gaming and so on, right? We saw a number of these things in yesterday's video also, right? And that is being powered by the concept. There's a lot of change happening in the architecture and application build, API and microservices. Okay. So let's look at API, which stands for Application Programming Interface. Okay. So we all agree that digital empowerment of the business system is a must. If you are not making your systems accessible to the global world or to your customers or to your businesses, then you're going to lose market share. And we saw that even through very big banks, which are spending a lot on technology, they are not able to grow. All right. So customers are adapting faster to technology innovations like Internet of Things. Somebody had a question, we'll look at it tomorrow. Artificial intelligence, voice assistant, chatbots, smart mobiles. So the business capabilities are being extended to all these new innovations. Yeah. So it's not enough to tell your customer, no, we don't support it, right? You call the phone or we send by email, right? So these advances are so dynamic that the businesses themselves are finding it difficult to merge, right? So I think that's what is many organizations are struggling how to modernize their systems, okay? Because the systems could be technologies of 10, 20, 30, 40, 50 years old, okay? How do you become relevant? How do you stay current? Okay. So one of the things that has happened, and this is just one part of the puzzle, is API. It's a concept, is a piece of code that enables different services and applications to communicate and share information with each other. Okay, so it's a piece of code. Okay, and basically the whole information system is created into service layers, and we try to understand a bit of that, so that different systems can talk to each other and allows your existing systems to talk to customer systems or customer devices like the mobile or gaming and so on and so forth. Okay. So that's what API is, a key enabler of digital transformation. Okay. And what's a microservice? Yeah. So microservice is a single service offered by a company. It derives from distributed computing architecture that connects many services rather than having one large service. And a microservice can be delivered through an API. And we look at a conceptual model and try to understand in examples. Okay. So API is a method of communication between a requester and a host, usually in the networking terms through an IP address. An API can communicate multiple information, data you want to share or a function. Okay. Whereas microservice is more about a software architecture. API is how do you expose that microservice to a customer. Okay. So there is a distinction. Each does its own different parts in the architecture. Okay. So take a look at example of, you're talking of APIs, right? So at the bottom you see is your all your systems, yeah, your apps, your mainframe, your FTP for file transfers, databases, web services, legacy systems, applications. Yeah. So what you have is the top is how you're making these available, exposed to your end user systems, whether it's consumer or business, right? Mobile, person, another building, laptop. This looks like, mobile instrument, people, cars, even your devices, Internet of Things. Yeah. So you have APIs of provide different things. Okay. So you have APIs for your experience, right? So your customers can actually experience it through these APIs. Okay. Then you have processes which work on it so that it gives you this experience. So for orchestration, composable microservices, and then you have system APIs that talk to legacy systems. Yeah. Modernization, connectivity to SaaS apps, web services, other APIs. Okay. So basically what you see is that there is a layer of service layers which uses microservices and APIs. And this is what an API does. It's API-led connectivity. So you have an IT, you have a line of business, and you have an app. Okay. So this is different levels of abstraction. Okay. So this is just to give you a conceptual view that APIs are pieces of code that exposes the functions for people to build code on top of that to just call the functions. And we look at some examples, including APIs built by banks, and we talked of federal banks. So we look at some of those so that you'll have a better understanding of what exactly each API can do. Okay. So what does an API do? It binds the data, process, and business systems, enables the outside world to access the system and data through APIs. It acts as a governing authority to business data. And API means it restricts what it does. Each API is very small. It has a set of functions. It uses some data. So it controls the access to the business system behind. So it basically provides a consistency of usage, and it enables the business to integrate with a number of outside systems easily. Yeah. And that way business systems don't need to keep on changing. They just expose the functionality to outside systems, okay, to number of endpoint applications and devices. So APIs is, allows you to actually expose your business functions bit by bit, piece by piece, so that people actually don't know the complexity of the business system. Yeah. So just an example, right? We all use a phone to access our bank accounts. all that is being exposed through APIs. Right? So some API to show you your bank balance, to show your statements, to do a payment, to look at your Beam UPI request, right? A lot of these things are there. Yeah. Okay. So another way of looking at it, right? You have an end user, right? So you have an end user. So either comes through various a phone or through a keyboard input or through a microphone. Yeah. This is an expression. This is your client app. Okay. That is just how your services are done. So the API service detects what is being asked via other APIs. It gets the information from the database. It collects information. It provides to create a service. It passes it on back. Yeah. So this is how APIs get integrated to the end user. Yeah. It's a chain of communication, functions, data using an API layer. Okay. So this is one way of thinking of the abstraction. It's not one simple piece. It's a lot of orchestration happening. Yeah. So someone has to understand what you're trying to do, detect the intent, calculate the response from the database, and then pass that information here, which creates a packages in the form that has to be displayed through an output. Okay. So it's a lot of series of interactions that happen, some in front of you, some at the back end. Okay. Okay. Let's look at a small video, I think, to just understand this again from Society General. Okay. So I'll just. I'll share it. Just give me a moment for me to check it's the right. It's a short video, but again, you get a sense. So let me share it, and then we take a look at it. Yeah, I'm sharing the sound. I know I have picked up examples, SocGen, because it's one of the leading banks. And on a personal note, I worked for a French bank, Indo-Suez, and in my opinion, they are very, very advanced in financial technology. So I always love what they used to do. And I'm talking of work I did more than a couple of decades ago. So a lot of technology and business, what I learned is working for these French banks. So I always find they are little ahead in terms of, I'm not talking of the cutting edge technology, but financial technology and how they run business. There's a lot to learn. So if you find me sharing things from SocGen, you can understand why I'm doing that. So anyway, let's look at this little less than 3-minute video to understand about APIs. Okay. Everyone can see the screen, the video screen? Can you hear the
transformation
sound?
Of the information system.
Can you hear the sound? Okay, thanks.
Yes, sir.
Service layers, or APIs, lies at the heart of the digital transformation strategy at Société Générale, Global Banking and Investor Solutions. What exactly is an API? An application programming interface, API, is a small piece of code that enables different services and applications to communicate and share information with each other. For instance, an API A can send information about a specific security price to another API B that can then compute the financial risk of this security using the information it has received. APIs make our information system more agile because they can work independently as well as interacting with each other. They can be called by one or by several client applications, which guarantees a more fluid information delivery and an integrated user experience. Because APIs can access the application components, the delivery of services and information is more flexible. In addition to this, having access to our external partners' APIs is an additional source of intelligence for Société Générale. Our clients connect to the APIs we put at their disposal. They can thus access Société Générale's intelligence in a safe and secure environment. This enables us to have a better understanding of our clients' requirements and allows us to adapt our services accordingly. If an SG service proves to be popular with our clients, and if we are able to offer this service as an API, our clients can then benefit from using this and may want to include it into their systems. Accessing information is now easier thanks to APIs. Giving our staff the ability to access Société Générale's services through APIs encourages forward thinking and disruptive business models to emerge. APIs open up a doorway of creativity between departments, clients, and business partners. Société Générale already offers an extensive range of APIs. If you are about to embark on a new project or have an existing project that needs to be enhanced, it is very likely that we already have an API developed to meet your specific needs. Similarly, we encourage all stakeholders to declare their APIs so other services can benefit from this. APIs are the foundation component on which today's corporate digital platforms are being built. This means we can engage with our clients at any time on any device.
Okay. Let me throw up the screen. Any questions? Everyone conceptually gets the idea of the API. We'll look at some more examples for sure, but how do I can see there are a few questions. Yeah, sure. Okay. Any questions on this? That hopefully gives you a concept, right? You have basically small building blocks, and we look at some examples, okay, of APIs. Yeah. Question? Yeah, just let me see. It's stuck. Yeah. So what is the benefits of an API led, right? You can, if you have most of your systems which are legacy, right? Mainframes, Unix systems, which are doing a lot of critical enterprise processing. You can't just rip it apart and build something new, right? Everything cannot be rebuilt, right? So you have to leverage it. So that's where API-led modernization comes in. You decrease costs, you stabilize the ecosystem. Okay, you don't change everything. Consistency in data management, same digital experience, that is key. Harmony across various interfunctional systems. Okay, if you pain of integration is taken out, you can manage all your APIs. You can use a single platform to expose enterprise data. So that's the approach being taken for digital transformation. Yeah. So when you talk of digital transformation, some may think, okay, why don't we actually build new systems? It doesn't work that way. So we talked to Bank of America, right? I worked for some of these investment banks. Do you know how many corporate systems they had? I'm talking of not recently, but even 5-10 years ago. They literally would have, you're talking of 2, 3, 4, 5, 6,000 systems, all because they've been built 30 years ago, some for the US, some for North America, some they are built for Europe, some for UK, some for Middle East, some for Asia Pacific, some for Japan. You're talking of 4,000-5,000 systems. You don't have the time in this lifetime to actually rip it apart and decommission it, right? What you do is you try to build out functionality which the customers want, build services, build APIs, build new systems, save costs by moving to cloud and make it available. Yeah, you can't expect a big bang to change, right? So this is exactly, even if you expect a transformation happening in some of the big banks in India, you can't expect them to decommission old system. They will have to build application architecture layers for using API, microservices, and other technologies to make the data available, right? So, for example, yesterday we saw Sony Bank, right? Sony Bank didn't probably started off in digital, and even after that, they moved the data onto cloud, right? It's not easy for these big banks, the global banks, to actually just move to everything to cloud, but they have to digitally enable these for customers, especially other business and customers, to access. And that's key. Yeah. So keep that in mind. It's digital transformation is not about making everything digital, but making sure your processes are not stuck and you build in new technologies or new processes or new integration to push your data out to customers, to departments, to different countries, so that they can actually access the functionality and you don't lose customers. Okay. Okay. So, obviously APIs can be private for internal use, restricted use for some customers, or public. Yeah? So the question is, what service and data can a company consume, right? Yeah. So there are three categories that you can think. Yeah. And when we look at open banking, we'll understand, and account aggregation in India that's coming up. General information about the company, types of products, cards, loans, insurance, funds, accounts, promotions, locations of ATMs, agencies, rates, indexes, calculators. Yeah. General information is available for all. Specific information. Yeah. So you have to log in, tokenization, customer profile, customer offers, payments and transfers, fraud prevention, push notification, transaction history, right? Specific. Yeah. Quotations, balance, calendar, planning, loyalty exchange, yeah, partners. And then use cases is, so we have general information, specific information, and then you have a mixture of both. Yeah. So let's look at the kind of use cases. Yeah. For example, mobiles and devices. You need devices to make photos of any registration document. GPS with APIs, you can point and get GPS, right? That's what we use it, right? Google Maps is one of the biggest. It's built on APIs. NFC, and digital wallets. Yeah, the near field contact. Yeah, you use those cards, right? ATMs, point of sales. Yeah, so there are many use cases in mobiles and devices. Yeah, most of the things have to take for granted. There's an API design that's happening behind. Okay. Yeah, data and analytics. Yeah. So real-time monitoring of integration transactions, aggregated data, demographic, financial, technical data, things that you see on, your mobile for stocks, quotes, mutual funds. A lot of that, is providing aggregated data. Yeah, and also it is used. Cases are there for integration with analytics and artificial intelligence platforms. Yeah, a lot of APIs, right, to actually run those services, and you can actually find some information. Internal operations. Yeah. Security mechanisms, authentications, backend protection, caching, data transformation. Yeah. So there's a lot of things used for internal. So APIs are used in every field, and for new channels, right? Marketplaces, platforms. Yeah. Putting products on other companies' platform, white label, right? So if you go and check your Amazon screen, you see, or some others, you start seeing other companies' things. If you go to Tata Click mobile app, you'll see other companies' advertisements. Yeah. So how do they do it? They have to pull it through APIs. Yeah. Store partner using your APIs, right? So you have partners for certain things. Create API use cases. Yeah. So APIs are used in every single technology that we already are using. And then there are some general omni-channel, right? So you basically, you keep moving through different channels. You go through booking.com and you click a hotel and it takes you to the hotel website, right? So website, chatbot, physical store, social, right? So you sometimes have to make payments on whether it is on social media or through banking, right? Or innovation, right? So sometimes you actually use APIs for innovation, hackathons, and so on, product launches. Yeah. So APIs is all over you. Okay. Next time you use a function, try to think about what the API could be. And when you look at some examples, you'll get a feel of the how small this could be. Yeah. Other examples are like financial institutions for your checking accounts, credit cards. Retail giants use APIs to communicate with courier networks, packaging, right? You check with Amazon, right? So they use APIs for getting the status. Okay. Web applications for front end for connect with all the back end functionality data like banking. Streaming service like Spotify, Netflix use APIs to distribute. Automotive company like Tesla sends software updates by APIs. Yeah. Others use APIs to unlock car data for third party. Yeah. So API use cases are literally hundreds. In different industries, they are different. So I think this is the reason why the digital transformation is happening. Fintech companies are just building services which are based on microservices and APIs. They put it in cloud, they come with an idea, they build the user interface, and there you are. Yeah. Yeah. Let's look at this another small thing on open use case and open banking. Okay. I've been talking about open banking. So open banking is essentially driven by this technology thing about microservices and APIs. Okay. So let's look at this short video. I'll have to share the yeah. Can you see the video? Okay.
Hi, Roger here from Google Cloud, and in this video, we'll have a look at Pay Later and its relation to open banking, a sample implementation of the API, and the wider picture of consuming and publishing APIs. Open banking is a system of allowing access and control of consumer banking and financial accounts through third-party applications. It encourages interoperability between banks and consumers by making available the bank's core services and accelerating their digital transformation. First, we'll show you a common use case, and then we'll unpack it for you. We'll start with the end-user experience. An API consumer, in this case a merchant in the e-commerce industry offering last-minute Chromebook deals, develops a new app experience using Google Assistant. Let's have a look. Talk to Pixelbook Deals Store.
Hi, welcome to the Pixelbook Deals Store. What can I do for you?
Are there any special offerings?
Here you go. You've selected Pixelbook Go, 16GB RAM, costing £854. Would you like to pay now or pay later?
Pay later.
Okay, now choose the bank you're with. After log into your bank, I need to link your Pixelbook Deals Store account to Google. Is that okay?
Yes. When your account is linked to Google, the app can customize your experience based on your identity. Financial data or authentication data cannot be collected via the conversational interface. So we're now shown the terms and conditions for Pay Later, and there's a link to review those conditions. Simply click on it and then return to the deal page when ready. Here's a sample reference to a terms and conditions page. Whenever we're ready, we can go back to the main screen and say all good. We now see some of the loan offers to Pay Later. We can scroll up and still reference the terms and conditions if we want to. Once we're ready, we'll select the desired loan.
Okay, that's it. Pixelbook Go, 16GB RAM is now yours. We'll take it from there and send you a confirmation email across shortly. Speak soon. Bye.
Until now, we've looked at this from the perspective of a merchant leveraging the bank's Pay Later APIs to improve the checkout experience. But how do we get access in the first place? Stepping back to look at the wider picture, there are more actors involved to get it all working. First, the bank wants to share a service, in this case the Pay Later API, but still maintain some restrictions, such as applying a call limit. Second, it's the merchant who is asking for access to those APIs in order to build better apps. Third, it's the API product managers within the organization who treat APIs as products, and therefore are looking at publishing easy onboarding content and getting an overview of the usage statistics. Now, we'll have a look at how a developer can find those APIs, in this case, as an API consumer again. Here's a sample developer portal of the bank, which allows anyone to browse through the API catalog. Here, we're already logged in as an app developer of a partnering organization, in this case, the merchant. And the first thing a developer typically does is build a developer application. We already have here the Deal Finder assistant previously created. Upon approval of the bank, you receive credentials, namely an API key and secret to access this Pay Later API. Very often, developers want to test this API and want to see what the response is, or how to embed it in an application. We can go into the Pay Later API specification and we can see all the different paths and operations. Under Loan, Payment, and Refund, we can send a test request. For that, first of all, we have to authorize. We select the app from before and authorize that the API key credentials be stored. Now, we can enter some consumer ID and some payment resource identification and execute the call. This will return a payload and give a developer an overview of how the API works. As you can see, Apigee helps accelerate the publishing of APIs, making them ready for consumption while keeping an eye on where they're being used. All in all, this shows what's possible beyond open banking, namely the opportunity to build new customer channels with more control over the data, developers, and partners to create a connected experience. This enhances interoperability between traditional banking data with an API ecosystem. Thanks for listening in, and feel free to read more about our open banking solution and what Apigee provides for APIs and financial services at the link listed in the description below.
Sure. So hopefully you have a good feel of how things are actually working and how this gets actually done. Any questions on API itself as a concept? Okay. Okay. I also talked yesterday about Federal Bank, right? I said it's one of the leading banks in India in terms of fintech. Yeah. And Federal Bank has already been offering API use cases for a long time. In fact, it offers this banking, various APIs to fintechs, corporates, and technology already. It has some access to very many services already. It's a go-to bank for, that's what they say, for startups and fintechs to integrate APIs. And their API FX remittance was 1/6 of India's total forward inward. Okay. So let's take a look at what they say, what they offer, and then we look at some of the actual things. So this is Federal Bank, which is one of the private banks in India. Let's see what's happening. I seem to have stuck. Yeah. So let's see if we can go to the website. I seem to have some problem with there. Okay. So I'm actually taking you to the Fed Bank's website where they have APIs. Okay. So this is their website called developer.fedbank. Can you see the site? Okay. So what do they offer, right? So basically, they have a bunch of APIs that somebody can build a credit application, credit access, digital credit, funds transfer, UPI, account opening, remittance. Okay. So let's see. So what you see here is all the APIs that they have available, which is available to any of their partners. For CRM, they have 18 APIs. This is, I guess, this is their general ledger accounting. This is standing instructions, SMS, mutual fund, gold loan, non-individual customer, NSDL, and prepaid instructions. Okay, so they have a bunch of APIs, and let's take a look at any one. Yeah? Just see what is there. So we look at GL Home. Okay. Okay. So obviously, we are accessing public, so obviously we can't do anything, but there are 4 different APIs: the home status inquiry, home account, customer detail, and pledge card. So if you click on the first one, home status inquiry. Yeah. So this is a description. The API can be used to inquire the status of API requests initiated by the fintech. Okay. This is a bit of the screens to see in various. I don't think we have access. Okay. So this is, yeah, there is some access. So it shows you in different languages, the code. Yeah. So this is in Python, for example. This is how the code looks like. So people can actually get ready-made code to actually build their stuff. Okay. It shows you what is the kind of security. I'm not getting the technical details, but what is the request you can do? Okay. What is the content? What is the accept? What is the responses which are okay? Yeah. So this is just one API for the home account. Yeah. We can actually look at something on the mutual funds too. Yeah. Let's look at, they have 3 APIs for mutual funds. Customer details. Okay. Account details, balance check. Okay. So I clicked on customer details. Okay. So what they're saying is that this API is used to get the customer details for onboarding to the mutual fund module using Fed Mobile. Okay. So this is a mobile API. Okay. So this again has the windows to see various codes. Okay. So this is some security parameters, the request parameters and responses. Yeah. So you can see they have, this is the kind of information that people will pull out. If it's already an existing customer, you can see the customer detail, nationality, country, occupation, state, so on, mobile number, customer name, PIN code, etc., etc. It's all test data, right? So you can see this is the kind of information it pulls. And so you see, this is just one API to actually just get the customer details. You can see they have actually done this for a number of different things. So this is an account utility API. We have 2 APIs within it. Customer details is a utility to confirm before. So basically this is used by merchants to confirm, the account belongs to Fed Bank. Yeah. So again, you can see a lot of the technical parameters and so on. There's a lot of details. So we won't get into the implementation, but you can get a sense, right? It's a piece. They have abstracted all the small pieces of functionality, both application functionality, even system functionality, security functionality, everything can be created with an API. And typically this is what they do. They publish it. So everyone, any of the fintech partners who want to build, get the mechanism, the protocol, and they're able to build on it. Yeah. And that's the basics of what's happening in open banking. And we will continue to look at open banking. Yeah. But I'll just stop here. I hope this gave you a good understanding of what's happening. Any questions on this? So FedBank, like you see, you can actually go and check. A lot of other banks also are offering this, including Zerodha. If you go to the Zerodha and search for API, you'll give you, they have a system called Kite. All the Kite APIs you can access as a developer and build APIs and functionality on top of the Zerodha engine. Okay. Let's get back to our So basically, Federal Bank has already done this. Many of the other banks are already doing it in preparation for open banking and account aggregation. So FedBank provides APIs for all these. Yeah, account opening, remittance, fund transfer, digital credit, UPI, instant loan. Yeah. So we did see this. I think I'll probably skip this demo, but you can go to their website and check this. Yeah, you can see all the products. Okay, and this is the open banking ecosystem of Federal Bank. Yeah. So if you look at it in the center, they have about 300 plus APIs, and they connect to about 50 different fintechs. So look at these functionality, right? eKYC, instant loan payments. We saw some of this, right? Digital credit, account opening, neobanks, and then basically that is further, can be enhanced for account opening, fund transfer, debit card, EMI checkout, and then these are all their partners. Okay, Google Pay, Airtel, Paisa Bazaar, BSNL, etc., Cash Free, Rupee, Lentra, Rupee, BillDesk, PayU, Pine Lab, Jupiter, Iffy, so on and so forth. Ripple, cross-border payments. So look at it, like they have built a fabulous thing. It started off as a traditional bank, but they are very much, in the top uh, 8 to 10 banks in India in terms of financial innovation, digital. Yeah. And we will be looking at, the account aggregator, which has been launched in September, and they are one of the banks who are the 8 banks who have been asked to build this out. Yeah. So they're already gone live. Yeah. So they're always ready, right? Because of the whole concept of building small services, APIs, partnering with fintechs, partnering with corporates, partnering with merchants. They're ready to this service, and we'll understand what this account aggregator. Okay. So again, they are part of the ecosystem. A lot of the account aggregation is done by a non-profit organization called Sahamati. You can go to their website to learn more about it. But I just wanted to leave this of the account API and what this means. Yeah, but hopefully everyone has a flavor of why API is so important for digital transformation, your digital services, and critical for a lot of the financial services. Okay. Then we look at the other piece, which I said is microservices, right? So I think all of us probably have a good idea of what is API. So let's try to understand microservices. Microservices is basically a bigger function. Yeah. Yeah. So let's look at Uber, right? So I think I have a problem here. There's something got done. So just give me a second. Something happened to the slide. Yeah, give me a sec. There's something very funny about this picture, so I'm not able to. We'll just skip it for the moment. Okay, the slide, this picture, but I'll just explain this to you. Yeah. So basically, if you look at Uber has created a bunch of different services. Okay, passenger management, passenger web billing, driver web payment, trip management. All these are services, And all these services use a set of common APIs. I think that is the concept that I wanted to show, and we look at some examples. Okay, so let's try to understand a little bit about API and microservices. Yeah, so I think this is another small video to illustrate what this is.
Architect working for IBM. It still surprises me just how many.
Yeah, everyone can see the video.
Yes, sir. Yes, sir.
Yeah. So let me play that. Yeah.
Hi, my name is Kim Clark. I'm an integration architect working for IBM. It still surprises me just how many times I come across misconceptions around microservices and APIs. Often hearing phrases like microservices are fine-grained web services, or that APIs themselves are equivalent to microservices. These all sort of show fundamental misconceptions under the covers. And so I've created this just to really break that out and talk about what the key differences are in those two concepts. This video is part of a series of videos and parallel posts we'll be doing in the integration blog, so feel free to keep an eye on those if you want to see more of the same. If we back up a moment and just say, what is an API? An API, fundamentally, application programming interface, it's an interface. It's a way of making requests into a component. So it's the route that you go in to make those requests. In modern use, that typically means a REST API, so that's a call made over a HTTP protocol using JSON data as the payload. So let's ensure we also have a clear, crisp definition of what a microservice architecture really is. So microservices architecture is about breaking siloed components up into smaller components that are more agile, more able to be changed more easily. We can scale them in different ways. We can put resilience models around those individual components in different ways. So breaking down large applications into smaller components. So really it's about the shape and the size of the component that's within the application itself. So microservices architecture then is really about breaking things down into small components. It's really a micro component architecture. And APIs are the interfaces that could be used to expose the functionality in those components. But the two are separate concepts. They're not directly related. There's no particular reason to assume, for example, that if you changed your design from that of a siloed component to that of a set of separate microservice components, that it would change the number of APIs that the overall application exposes, or indeed change their granularity. Those two things are completely independent of one another. So, microservices are components that are used to build up an application in a more agile framework. APIs are a way of exposing functionality of an application, whether it's written as microservices or not. And there's no one-to-one correlation between the two. We could easily have a microservice exposing multiple APIs, or just one, or indeed none at all. A microservice component could be working on asynchronous messages, picking messages up, manipulating them, enriching them, and putting them somewhere else. There may be no API whatsoever. It's just a component of an application. We've skimmed over some pretty deep concepts here. So microservices architecture is non-trivial to understand. And when you start comparing it with things that came before it, like service-orientated architecture, and comparing and contrasting between them, that can really get quite sensitive. So there's a link at the bottom of the slide that'll give you a route to an article that describes all of these concepts in much more detail. As I mentioned at the beginning, we'll be doing various posts and videos on topics to do with integration, design and architecture on the IBM integration blog and on the integration media channel.
Yeah, hopefully that gives you a much good view of hopefully that gives you a much good flavor on what API is and what is the distinction with microservices. Okay. So I think with that, we probably would have covered our focus on the API and microservices. Yeah. So just to sum up, for banking, for banks to adopt platform standards or to expose, they have to re-engineer the banking architecture to make it microservices oriented and or also allow APIs so that it can be digitally enabled by consumers using laptops or mobiles and so on and so forth. Yeah. So you need to do an enterprise-wide transformation to a microservices-based architecture. So I think that's one of the approaches towards digital transformation. Yeah, you have an existing business. If it's a new business, we saw the fintech starting new, but existing business, they have to do the digital transformation. Okay, so banks have legacy core banking architectures, monolith applications, multiple point-to-point batch processing. You can't transfer in a face-to-face. Yeah, you can't change it all at the same time. Whereas banks with modern cores, if you have built something modern in the last 10, 20 years, typically service-oriented and mature API, then you can transform to a big bank approach. Yeah? So I think the banking industry is grappling. Some are old, some are new. How do you actually do the transformation, digital transformation, using all the technologies, using obviously, microservices architecture. So that's the challenge for a lot of the big banks, big insurance companies, big asset management firms. So we have seen this, so I'm not spend more time, but basically it's a very important in part of modern day design. You build a suite of services, each running its own process and communications. Okay, so it's become very mature and stable over the 3 to 5 years. It's become the bedrock of digital and other industries, not just finance, ride sharing, streaming, all are replacing monolithic application with MSA. Okay. If you deploy it, even banks can start integrating and scaling up rapidly. Okay. So this is what traditional banking is today, right? Banks, customers, the future, let's say platform banking, essentially you're very well connected with the entire enterprise. Okay. Whether it's other banks, third-party providers or customers, because your architecture allows you to think of it as a platform. Yeah. It's not a closed system. And this is something that we look at it also later, but so this is an example of a microservice-based architecture in banking. Yeah. So one side you have the channels, bank tellers, social media, telephone, remote banking, mobile, online, mobile, Salesforce, ATM. And then you have a bunch of microservices that are providing your services, right? Balance services, transaction services, statement services, interest rate, all your deposit services, all the loan services. Right? So it will be multiple services you need to build: underwriting, amortization, statement, interest rate. Okay, then you have common services: account, customer, transaction, reporting services. Yeah, and then obviously at the end you have a lot of these data, right? Counterparty, account, transactions, and then you have a bunch of APIs, right? So how do you have different internal APIs, external APIs to be able to pull information or functions from all these services and share it with your external people. Okay. And these APIs, you connect to your external partners. You also connect to internal divisions: fraud management, risk, reg reporting, AML, legal, financial. So this is a conceptual view of a microservices-based architecture. Yeah. So this is how you can see a digital transformation involves you exposing and converting your existing business functions to services, having APIs of some form so that you can connect to your channels and connect to external internal partners. Okay. So that's the whole principle about digital architecture and digital transformation. Okay. With that, I think we finish this section and we'll go to payments, but I'll pause here for any questions. Okay, so let me just also pause to keep having my cup of tea. So we looked at the banking transformation, right? I know it's a little harder to understand because it's not hardware, right? It's all about application architecture concepts. Yeah. So now essentially you have a cloud, on one side, that's one moving part. Your APIs and microservices are the moving part. Yeah. And then obviously we look at data as a separate moving part tomorrow. And then the introduction of a new digital asset like crypto, right, tomorrow. So you see, there's so many moving parts that when you talk of this whole digital and fintech, I think, as I said, it's a tool, right? It's not easy to see the connections, but slowly you're seeing the connections. Okay. So let's look at payments. Yeah. Yeah, I think before we go to payments, I think we probably have to look at API banking, right? We just got the introduction to this. So we look at open banking and payments. Yeah. So I think that's the topics we want to cover today. So obviously, let's look at the time. So this is a banking functional view, right? I think we understand from the previous slide, right? This is how a bank looked like. Most of us have this image, right? They have channels, business processes, and the products, consumer, commercial, treasury, analytics, customer, and then you have the databases. Okay. So when you talked of banking transformation, how did open banking come about? What's open banking? Okay. So just to recap, right? Everyone knows what a bank does, right? It has licenses, they hold capital, they take deposits, make loans, provide services, serve retail customers, some serve businesses, some other banks. They basically make money by taking deposits, give interest to the deposits, and lend and get interest. Yeah. The difference is the net interest margin. They also earn fees from payments, credit, finance. So this is, I think everyone should understand what a bank does, right? But if you look at it, because they have licenses, they're privileged, right? Not everyone can open a bank, right? Even if you need to open a bank, you need a license. The license is provided by the central bank of that country, right? In India, it's the Reserve Bank of India. Yeah. So for centuries, banks have been self-contained, not sharing any product, service, and customers. Yeah. Slowly, we are seeing things happening: APIs, cloud processing, storage, insights, contextual delivery, right? Finally, fintech plus open banking plus competition is pushing banks to follow other industries and open up. Okay, so banks, they had a license. Why would you want to open up? Correct? You don't have competition. You have competition in the 5, 10, 15 banks in that country. Okay. So if you look at how banks were, in the future, you'll see banks, there'll be back-end banks will have license and capital. They'll allow low-cost funding. They'll earn interest margin. They'll earn fees. And front-end banks could be the fintechs, right? No licenses. They don't need to hold deposit, providing customer experience, own customer relation, generate fee revenues by providing value service to customers, and generating wholesale business, right? So this is one way of looking at banking. Break it up. Some part which has license, some part which is just going to be the customer facing. Okay, so that's one way of looking at it. But the key thing is banks have license. They didn't have an incentive to innovate. Okay. So if you want to think about it this way, in the future, the way what we said, you have the bank, open banking platform, and third-party apps. Yeah. And third-party apps can connect to other banks. Yeah. So that's the one way of deconstructing this, breaking the core part and the user part of it. Okay. So this is one way of deconstructing it. Okay. So open banking, as we know, really was pioneered in the UK. Yeah? So it's very important to understand how this started and also what happened in Europe. Okay. And we look at what has happened in India after that. So when all this context, you had some 8 or 9 banks in the UK and they were closed. So basically, UK government was saying how to allow new financial providers to enter the market, how to encourage development of new products and services to provide choice for customers. So that was the goal. Customers had no choice. Okay. Second, based on investigation, they said there is need to improve competition. There's a lot of collusion between the banks. Okay. And incumbent banks did not have to compete because new market entrants found it difficult. They could not compete because they could not enter. New banks could not enter. So that was the background. And this was what the FSA, right? The UK regulatory authorities. So they introduced this open banking initiative to change the status quo, improve competition and efficiency while stimulating innovation. Okay. So what is the goal? It intends to make it possible for third parties to access customer data held by the banks by compelling the UK's largest banks to make such data shareable. in the secured standardized form to registered third parties, right? So think of it. Before this, you could access and download your bank statements, but sharing them in a machine readable format was not easy, right? Even in India, if you have an account with State Bank and ICICI Bank, you download, but how do you bring it together? Most of the time, they give you an Excel or a PDF file. Yeah. So the idea of open banking is making it possible to get the data and having somebody pull it together. Okay. So that is one of the objectives. So, I mean, the numbers may have changed, but these were the big traditional Main Street banks in the UK: HSBC, Barclays, RBS, Santander, Bank of Ireland, Allied Irish, Danske, Lloyds, Nationwide. Yeah? It forces these banks to release the data in a secured, standardized form so it can be shared more easily. Initially started with simple records, location of branches and exact details. Okay. This first part of open banking went live in March 2017. So basically it started making it easier for disabled people with disabilities to find which is a good deal. They don't have to go to the branch. That's how it started. So it's not very long ago, 4.5 years ago. Okay. Any questions so far? Anyone? So open banking is a system under which banks open up their APIs, right? We come back to it. Open up their application programming interfaces for third parties to develop new apps and services. Open banking offers incumbent banks the opportunity to partner with fintechs rather than compete. Right? So existing banks could partner. Yeah. So the idea was expose it. At the same time, you could partner and you could get a share of the revenue. Okay. So this is the background to open banking in the UK, and UK has really pioneered this push towards open banking. Okay. Any questions so far? The same time, and we saw this also, right, in the evolution of a lot of the changes in the finance world yesterday. Europe had started something called Payment Services Directive, and this PSD2 is the what led to open banking, and you'll find it is quite similar to what UK was doing. Same time. It started off in 2007 as a payment service providers directed to have a single payment market. Okay. So open banking is the UK version of PSD2, yeah? But UK was really ahead of time. Yeah? Difference is PSD2 requires banks to open up the data to third party. Open banking in the UK dictates they do in a standard format. Okay, so that is the thing. Same concept, pushing the banks to open up the data. In UK, in Europe, PSD2 doesn't say which format. Open banking is dictating the format, which is great, right? You have a standard format apps, you build apps, it will all be standardized, easier for them. So in Europe, it was to go in effect in 2019, and the deadline got moved to 2020. I think they have started, but I think you can go and read up about PSD2. It also introduces security requirements for the initiation and processing of electronic payments and protection to consumer data. Yeah? So I think that's the key, right? If you open up and you share, what is your protection? And that is the same question that's been addressed in India by the Reserve Bank of India. Okay. It also recognizes the regulates third-party providers to access or aggregate, account, and initiate payment services. So just not everybody can actually be part of the open banking, ecosystem. There are regulated third-party providers. Okay. So there are two kinds of services that PSD2 has harmonized. One is called payment initiation service. So basically allows clients to make payments to a third party from a bank's app using any client account. And account information service to collection and storage of account. Yeah. So basically, without getting into details, there's two parts to it: payment initiation and account information. Okay. While in India, we started off with the payments initiative, right? And now everyone uses UPI, right? I would spend more time, but last year it was like about 2.2 million. It's probably gone about 4-5 million. Okay. But UPI is again, integrated payment system allows users to link bank accounts to a smartphone. I think most of us are using UPI. Okay. It's available 24 hours. We all know this. So we have a VPA, right? Which is important. Like I think, everyone has, like I have my some thing into at ICICI. Yeah? So things like that. Okay. So I won't spend more time on UPI. I think we will look at payments separately, but this is just to give you a flavor. It benefits for customers. We all know that. Merchants are also being able to get money quickly. It has speeded up, the transactions. It has reduced, the increased the collections, reach of cards. Okay. And open banking also started in Australia. So this last year they started in 2020. They said they had a Consumer Data Right Act, and from last November they started rolling out in stages. Yeah, open banking in Australia. Yeah, again, in Australia you have the big banks, ANZ, National, NAB, Westpac, and Commonwealth Bank. Okay. So again, the regulator is trying to get them to open. The big four account for 90% of the deposits. Okay. So they're holding on to the customer data. So the Australian Commission also is trying to push them into actually doing this to all the other banks. Okay. So that's to give you a flavor of that. So let's look at, so open banking has revolutionized, right? We saw in the first day, we looked at some of the fintechs. All of them are essentially using the backend for payments and banking to aggregate not just your bank accounts, but your mutual funds and look at things holistically. Okay. So this was when it all started, right? The situation was people were paying too much for their overdrafts. Money was not earning interest, not enough switching. Yeah. So this is what happened. So basically, if you look at banks hold the record of everything we spend, right? They don't use it much. And now this is being available to third parties who can use it to create new products, right? So basically, open banking is not an app or service. It's a way of facilitating data sharing. So just remember that. Who does the sharing? So always remember that the account holder must give their explicit approval to any exchange or decide to use, and the consumers are given control of the data. So I think it is not a blanket approval. It's explicit approval and to also different parts of data. Okay. And you see the same philosophy that's in the account aggregation concept that is there in India, which we look at also. So what it does, the opportunities, if you have two different accounts at two different banks, one at HSBC, one at Lloyd's, because those two banks are not sharing, open banking lets you see them at the same time, and you can manage your money, right? I think that's important. And many banks have already started, and we go to see some startups that have already built around this, and things are moving very fast. Money management, right? So the other thing is not just banking, right? Investments. So if you have money sitting, you can't actually invest and put it in a liquid fund or in the stock market or a mutual fund, right? How do you optimize the money is not lying idle, right? So you have money management method. So the open banking will allow you to look at the money, pool it, invest, transfer, and so on and so forth. Lending, right? This is very, very critical, right? When you take out a loan, the thing about a bank is if you go to one bank, but you already borrowed from another bank, then you can actually give access. Open banking allows, if you allow it to give one-off access to 12 months income and spending history, right? So any of you are gone for a loan, right? They ask you for your pay slips, they ask you for spending, all that is paper, right? So this actually helps you get this information from other banks, and that is also what the Indian account aggregation network is going to do. Okay. So lending becomes very easy because of open banking, because one bank, if you get access to a complete history of income and spending, can decide how much loans you're worth, what is the interest rates. Yeah, it's also useful, especially some don't have a much profile, right? If you're not worked or you have just traveling, right? So there's not much history, right? So it also helps the bank assess risk. Yeah. Okay, let's pause. Any questions? Even payments, right? Payment systems are complicated. Yeah. So previously, when you had to buy something, you would essentially, if you're given a credit card, they have to get, the payment processor, which is the merchant, has to get in touch and validate the card through the bank or through the payment processor. Yeah. So a lot of hopping up. Now, it's possible because open banking to pay from an account, right? And that's what happened in India, right? UPI, essentially you're paying through an account. You're not using a debit card. You're not using NEFT. You're not using a credit card. Yeah? You're paying through an account. And I think that's been one of the most dynamic changes that has happened in India because of UPI and also because of the users of, use it very easy for using it on payments. Okay. So in many cases, the speed becomes faster for purchase because the bank just authorized the purchase, right? When you do a UPI, you're actually entering the PIN number of the app and the PIN number for your UPI in the bank. Yeah? So things are faster. Yeah. So I'm just going to give you some examples. Many of these, maybe a little older also, but the ING account aggregation app Yolt was launched. It launched a new account and contactless card to help save. Some of these fintech may have been acquired also. Okay, so that's the interesting thing. It was launched in 2007. That's when the open banking came. It got 1.5 million users who could see all their various bank accounts in one place. Yeah, so that's remarkable. Yeah. Most recently, the function was added for users to switch and save on household bills, combine pensions, invest their money, grow their savings via an in-app partners like other partners for investment, whether it be markets or investment or fixed income or money mutual funds. So you have these other partners that they linked with to invest. And now you have an account, a contactless card, right? We saw a company, right? You can do payments with a dongle, right? So you don't need a card. And then you can use it to actually save. And basically it's connected its API to American Express. Yeah. So we looking at why API is so critical to the whole digital idea, right? You have to be able to expose yourself. Your partners need to expose it, and you can connect and work as transactions. Yeah. This fintech says its app has 95% API coverage in the UK. Okay, that means it covers all the functionality that anybody would do in the UK, and it covers. It includes all the 9. It covers APIs to cater to all the 9 banks as well as new challengers like Monzo and Starling. Yeah. So that's an example of ING. ING is obviously a Dutch-based bank, obviously big presence in the UK too, but big presence in Europe. Any questions on API open banking? Another example, and we saw Monzo Bank. I think we came across that in some example, right? Monzo Bank is also one of the largest banks that's there. It is an app. It's just purely an app. It helps you budget. It helps you travel abroad. It earns interest on savings. You could call and get help, but there's no branch. And they are a fully fledged bank. They started much earlier, 2013, but they got a license in 2017. Yeah. Authorized in the UK for getting a banking license, you are authorized by the PRA and also the financial context. So the UK regulators, the banking regulators are 2 parts. One is for regulation, others for conduct. Okay. So Monzo Bank is one of the real fintech startup banks that has grown very large. Yeah. Just an app because of open banking. Yeah. So what is the opportunities for banks, right? We think that they're going to lose their market share, but because we think they're going to lose business because new players are entering, customers will definitely affect the demand, but they will improve their technologies and make sure the services are competitive. They do have some fear, but I think there's an opportunity they have to take and move fast. Yeah. The opportunity comes by opening up the APIs. Bank easily connect to the APIs of other providers and expand their offerings, right? So it's a two-way process. If they open their APIs, they can connect to other APIs and expand their offerings and provide the same thing to clients through partners. Second is they can offer a marketplace of different products and services. Yeah, I think that's the other opportunity. They can organize partnership alliances, inviting customers to view relevant information with other banks. Okay, so for example, Santander, HSBC, I think it's HSBC, Monzo offer customers to view and manage their online savings, mortgage loans, and cards can be stored in any bank. So I think you can actually start looking for better deals across that marketplace. Yeah. So I think it is creating dynamics that probably the first view of open banking will think that many banks will lose out. No, some banks are losing out, some banks are growing bigger and bigger. Yeah. Also, because they can open the APIs, they're going to receive a lot of information about the behavior of the customers. And that's where a lot of analytics comes in, the use of data analytics and also artificial intelligence and forecasting. Yeah. And because of digitalization, there's a lot of transformation happening in these banks and other developments to implement open API, which is standardization, which will make banking a lot more simpler. Yeah. Because of this open banking, they're automating their services and they're reducing their costs, right? So ultimately, new sales channels will lead to lower costs and they can become more efficient, more profitable. Yeah. So there is an opportunity they have to move. Yeah. Yes, they're going to face competition, but there is an opportunity that's going to open up because of the open banking and digitalization and open APIs. The challenges, right? Obviously, challenges are a little obvious. They could lose customers. Yeah. If they don't improve the service, they lose customers. Obviously, there are risks with loss of data, personal data, data protection, money laundering, right? We do open banking through a fintech, right? Cyber security, right? I think that's the one thing that everyone is very conscious, right? That is why they have only dedicated third-party providers and fraudulent transactions. Yeah. So these are some of the challenges that you will see over and above other challenges in the business. Opportunities for fintechs, right? Fintechs obviously is a great opportunity. They're the biggest winners. They can start from scratch. They can raise money. They can build things on cloud. They can build new digital technologies, create new products, mobile apps, right? Most services do not offer service in real time. Yeah. They can create a new marketplace. And that's what is happening with the fintech world. We saw the categories, right? They are actually expanding each category and also creating new businesses in categories that didn't exist before. Okay. Yeah. Obviously, challenges for fintechs, right? More competition. Everybody comes in. Fintechs, all fintechs don't succeed. They have to deal with the loss of data loss, identity theft. They could have to face compensation. Yeah. So they could be a carrier of these violations. Yeah. And attackers will also hack into these fintechs. Yeah. So they need to be technology savvy. They need to face competition. They need to also take care of a lot of risk. Yeah. So it's a opportunity for fintechs and a challenge too. Yeah. As an individual, obviously, it's great, right? A lot of benefits coming to you. If you choose to, you can look at things in one place. You can choose services. You can pick and choose. You can compare. You can speed up your loan process, right? So open banking puts the power in the back of the hands of the customer, and that exactly was the driver from when it started off in the UK, right? The idea is to give as much choice and low cost and power back to the customers, and that's what is triggering of a way of innovation, wave of investment, and new fintechs coming in the space, competing with the big banks. Risk obviously is the same, right? Personal data, loss of theft. We give consent. Everybody is going to see your data. You hope the protections and security works. Yeah. So I think there are risks. You need to be understanding of that. And for a nation, right? I think that from a nation, obviously, is very, very important, right? It becomes a leader in terms of digital innovation. So you have more and more global customers coming in. Obviously, it opens up the economy in terms of businesses, new technology, new startups, attracts capital, right? So nations are also going to obviously get a lot of visibility, and a lot of benefits are coming in. Yeah. Yeah. So but there are a lot of technology and security considerations. Yeah. And I think we did talk about things, but let's look at it closely. Yeah. Again, before I proceed, is there any questions on this? Yeah. So how is it all happening, right? And we now know it, right? It's all because of APIs. It allows banks to conveniently and securely share data. We use services built using API all the time. Uber, we talked about. Google Maps, payments, telephony, all this is come together in Uber, right? So Uber has number of services, APIs pulled together, and you have one app in Uber. Yeah. So what is required for a key requirement, right, is consent, right? You want banks to confirm a user has granted consent, allows users to authorize a third party, and also they have to authenticate the third party is the right one, right? Let's say a third party is an app, right? Let's say it is Monzo. So the bank has to know it is actually Monzo who's accessing, right? So that's the authentication. Onboarding. How do you onboard third parties, and how do you get third parties to access user account data? Yeah. So a lot of considerations required for this architecture. Okay. Yeah. So I won't get into the details, but in the open banking UK, they created what is called an open authorization, architecture. It's a protocol called O Authorization 2.0. Maybe it has changed to 2 point something. It basically solves the problem of enabling a user to allow a third party to act on their behalf. Yeah. So it's a protocol for authorization. Okay. It's used for websites and sharing of password names. Okay. So there's a lot of technical details, but in addition to that, they have built a standard called OpenID Connect. It's top of open authorization for delegating authentication. So there are 3 roles for those using the standard: relying party, OpenID, and end user. Yeah. Again, there's a bit of details. You can go to the open banking website in UK, but basically they built a standard methodology on how to implement open banking, standard protocols. It's a consortium, and all the information is available in public mode. Okay. So now assume that you have all this open authorization mechanism. You have to onboard and verify the third parties. Yeah? So the last part is a directory. So the directory is a list of those who are authorized banks and third parties who are allowed to participate in the open banking. Yeah. Again, the registration on the open banking is done by the FCA. Yeah. So basically only selected players, banks, and third parties are allowed to participate in the open banking. And then they are given different methods to authenticate and onboard. Okay. This is an access. I won't get more into details how to access it. Okay, but this is how it looks like. Okay. Schematically, you have an open banking directory where all these are the participants. You have standards, and there is a method for establishing trust through the architecture and messaging. Yeah. So there's a trust network built between the third parties and the banks. Okay. So that's the conceptual open banking ecosystem. Okay. So if you want to understand how this will work, is you have a user, your third party, you have a bank, you have an open banking directory, right? So the user is trying to access service through the third party. The third party sends that access. What they do is first they issue a token. Okay. Then that is first they do an onboarding. They get a certificate. The certificate is verified. Once the certificate is verified, then they access the data, return the data once the authentication is done. Yeah. So first is establish consent and establish trust. Yeah. So there are 2 different message mechanisms at play. Yeah? But this is again a lot of conceptual technical, not technical, conceptual technical, to understand how they have built the architecture, how they have built the technical layers, and how they have allowed the specifications to go to third parties and banks. Okay. So this is how, if you remember the original figure, right? The user goes to third party. The third party internal network, the bank has an open banking API core services, and this another bank, they have open banking. And that's how this third party gets all this information after all the consent is done using O authorization. And then the user sees all the information consolidated across banks. Okay, so that's the open banking architecture. Okay. A little more, details. I won't get into it, but basically there are a number of APIs. They have read-write specification, account and transaction API, payment initiation API, security profile, open banking directory. So they have built a number of specifications, all use the same specification. We said that, right? Open banking is standardized. So every third party, every bank uses the same specification. So it's a lot easier to develop, a lot easier to find problems and fix it. and the ecosystem grows. Okay. Yeah. Again, there's a little more details of the different participants, user, provider, account servicing, payment service provider, third-party provider, payment initiation service provider, accounts information. So I define different actors in the part of the open banking. Okay. So now you can understand how open banking as a concept, and we saw this diagram, right? All this comes together because you have built a layer of building services, microservices, APIs, and providing, your core system, you expose it through APIs, and that's how open banking works. Okay. Any questions? Yeah. So this is what we saw in the previous thing, right? Microservices. Yeah. So now you can correlate API, microservices, and open banking. It's all this part of the same picture and different parts, moving parts. But UK has gone much ahead in terms of open banking. Okay, I will skip over these. There's a little bit of technical details. I'm sure you can read it up on the websites. Yeah. Again, security profile, they define something which is financial grade API, higher grade of security. So a lot more technical and security controls, for making sure everything is a little more safer. Yeah. Other security profiles for client initiated back channel authentication, CBA. Yeah. So, okay. So that probably gives you how API and microservices all comes together in the open banking. We saw open banking has happened in UK. In India, it started with UPI. Now we'll see what is happening now. We saw Australia has also started, but UK is where the things have really moved way ahead. Yeah, it's a pioneer of sorts. Any questions? Okay, so let's look at what is happening in India. India, we saw UPI, right? All of us know about UPI. But in India, they have just launched the account aggregation network. Yeah. So basically, the concept of AA, account aggregator, is to broaden the scope of financial data sharing, make it secure and user friendly. Yeah. So if you go through all the details, you'll find that they define these are the stakeholders in this ecosystem. Yeah. Any supervised financial sector institution that offers financial services and products such as banking, lending, asset management, insurance is classified as a financial information provider, FIP. So typically it will be your banks, it will be your asset management companies or your insurance companies, which are under supervision of the RBI or SEBI or IRDA, right? The FIPs. Okay. So these are the regulators, right? RBI, SEBI, and IRDA. And the pension fund. Yeah. Pension fund is considered a financial information user. Okay. So the PFRDA can solicit consent from a user by providing details to be captured by account identifier. So basically, account aggregators are entities that facilitate structured financial data sharing from the FIPs to the FIUs while maintaining a record of consent provided and offering the functionality to manage and rescind consent, that is to take back the consent. Yeah, so this is the framework. Okay, so let's try to look at how this looks like. Yeah. So how does it work? Let's look at a use case. A user wants to apply for a personal loan and wants financial planning advice. The user will ask by the FIU whether they go to each institution such as and ask for bank statements. So the FIU will ask for bank statements. For financial planning, they'll ask bank details, investment in various assets, fund details, insurance. The account aggregator application will source the data from multiple FIPs and relay via consent mechanism to the FIUs. So the account aggregator will get the data from FIPs and relay to the FIUs after consent. Yeah. So the account aggregation user doesn't have to physically provide hard copies. Okay. They just share the login details and download. Okay. So let's look at it schematically. Yeah. It has been started off 8 largest banks. It just started off in September. The initial 8 banks are HDFC, Kotak, ICICI, Axis, SBI. These are the participant banks, IDFC and Federal Bank. Okay. Yeah. So what are the principles? Account aggregator is an interoperable data blind consent manager. The account cannot read consumer data. They cannot resell consumer data. It can't enable consumers to selectively share and even revoke. So you as a consumer can share and revoke. AS have a fiduciary duty to consumers and are RBI regulated entities sharing digitally signed and encrypted data. So that's the concept. Like it's almost what the open banking is about. Yeah. This is a set of all the aggregators, which is right now account aggregators, technology service providers, FIPs and FIUs. Okay. So the account aggregators are, you have this inner layer, technology service providers are here, and then you have the banks. Okay. So let's look at the flow. Yeah. Okay. So any questions so far? Okay. So you have an individual, right? You have the financial information providers, banks, mutual funds, insurance, brokerage, tax, GST platform, other business and commercial entities. We have the account aggregator sitting in the middle with a registry. And this is the information users, okay? Robo advisors, wealth management, personal management, yeah? So these are the FIUs, okay? So the individual has to give the consent to share to the account aggregators, okay? The account aggregators, once they get the consent, they will get this information from this, wherever, whichever bank and mutual fund this individual has, that information will be, the account aggregator can't see, but they will give access to the FIU that has been, because of the consent given, and the FIUs may provide services on credit, personal finance, wealth management, and advisory. So that's the basic concept here. So you have the FIPs, you have the account aggregators, you have the FIUs. Okay, and then you have a lot of people providing technology, and the end consumer is there. Yeah. So basically, there has to be a request through open APIs. All of it is open APIs. There has to be a consent to share, and there has to be encrypted data flow. Okay. Okay. Any questions on this? Yeah. So the same diagram. I just it's a little more simplified, but the same thing. Yeah. Consent, request data, data flows. That's it. Okay. Anyone has any questions? Yeah. So what are the rules, right? Again, I'm just giving you the high level. There will be detailed rules. They cannot access the data. They can't store it. They can't sell it. They can only collect and transfer. Okay. And the user will be able to choose the period for which the data can be shared with the FIU. And AA can charge the FIU or the end customer for the data requested. AA may not charge the FIP for the data, as this creates growth hurdles. Yeah. So basically, there is a new act that is there being architected. It's probably there, data empowerment protection, to basically paradigm shift in personal data management to become human centric. The idea is that the banks should not take your data and sell, right? So basically, the account aggregators cannot charge the banks or the FIPs. Yeah, there's an incentive for them to share. The principle of the platform is to give users complete authority. They're not about to see, stock, or sell the data. So account aggregators can't see. A user registering will be able to provide or retract consent for sharing data in any officer account with an FIP. Will retain control to designate to the extent to which data can be shared. If the user has 3 accounts, 3 banks, he or she has the option to provide access to data from 1 or 2. Yeah. And they can limit the period. Yeah? So there's a lot of safeguards that have been built in. Obviously, we have to use it and try and see how it works out. Yeah. Obviously, they have UPI there and then A, right? So you don't want 2 different methodologies. So A entity will be able to transfer its data to an entity this. Okay. So they have tried to create some harmony between UPI and the A network. Yeah. So they have the same concept in A identifier as user into the account aggregator. Yeah. So I think they're trying to keep some of the principles there. Yeah, so basically they're trying to build some synergy so that people don't get confused also. Okay. Now this is probably old. Okay, so you can go to the website and check, but these are all they had given account aggregators to 8 of these. I don't know if it has changed. CAMS, Cookie Jar, FinSec, Geo, National E-Governance, Yodlee, Perfios, Aditya Birla. Just go to the website and check the current names. Yeah. Yeah. I think we looked at this. Yeah. So currently the way it will help the user is, there's so much you have to do something physically signed, copies of bank statements, notarize, share your personal user ID for a third party. So the account aggregator will simplify with a mobile, simple, safe digital data access sharing. So it'll create new opportunity for new services, new types of loans. Yeah? So the idea is to make things easier, to improve services, make things faster, make it digital, more secure, new products and services will come. Okay. Yeah, we'll have to look at all the kinds of data that to be shared, right? Banking transaction data, very soon it will be tax, pension, securities data, mutual funds, insurance. Yeah. So the scope will keep on increasing. So I think we'll have to watch the space. It's already live. So I'm sure many of us are going to get on that as and when we decide. Okay. Again, this is maybe a little old, but this is what is there in India. Yeah. Is it India only? No, this is, I think most of it is India. Open banking fintech ecosystem, maybe a little old. You have the big techs, yeah. PhonePe, digital banking, Kotak, Digibank, Access, Yono, Neobanks, Razorpay, many have changed. Of course, Jupiter, all these are coming from FedBank, API stack players, NBFC like Perfios, GeoCams, so on. The India stack, which is, NSDL, IMPS, APS, UPI. We look at some of the payment networks, API gateway players, AWS, MuleSoft, TIPCO, integrators, core banking, and the banking APIs, FedBank, Bank Baroda, IndusInd, Yes, RBI. I'm sure there are many more banks. These are the data providers. And then these are so an open banking fintech ecosystem is already developed in India. Yeah. So it's changing very rapidly. Okay. So that's I think the bit about the open banking. I just give you some statistics on UK. Had 2 billion users. This is beginning of the year, so there's more. The number of regulated entities were about 204 third-party providers and 7 account aggregators, 92 regulated entities. Some performance metrics from last month. Availability of the platforms, 98%. Average response time, 466. Successful API calls, 778 million in September. API success rate, 98.3. Failed is 1.75. Yeah. So this is very, very good metrics. And they have a history because they started. So this is a history going back, for a long time. The number of API calls, right? So this is what, in September, they had about 720 million calls. Successful payments. Yeah. This is, again, API calls in millions. Yeah. Successful payments, actual payments. 2.5 million payments in September using open banking. And the response time. So the systems are getting better, volumes have gone up, but they have become much, much more robust. So these are call times in milliseconds. Latest is about 400 milliseconds. API performance availability, yeah, has been pretty good, all about 98, 99. Yeah. This could be a little older, but just the list of open banking providers, Bud, new startups, Bud, Played, Tink, TrueLayer, Yaply, Yolt. We saw Yolt, yeah. In Australia, this was last year, they gave the permission, they launched, again, something similar, and then they have 3 phases, how they're launching it. Savings account, call accounts launched. Phase 2 is loans, mortgage, and last 3 is investment loans and so on. Yeah. So UK and Australia moved very fast ahead. So are some of the other Asia countries, and India is making its strides. Okay. Any questions? These are some technology practices. I'll just skim through this: portability, intent, no resale, real time, compliant, a la carte. Share whatever they want, private, secure, governance. So these are principles of a data sharing from a technology. Okay. So we looked at the whole API, microservices, open banking, banking transformation, how open banking, what's happening in India and the account aggregator network, and microservices architecture. Yeah. So I think we probably started off with fintechs and banking, and now we understand how these technology, how the digital transformation, how people are adopting these. Yeah. The last bit is payments. And look at the time, we have 10 minutes. I'll get this moving, and then if you have a small bits, it's not too long, we can finish off tomorrow. But I think logically, I think we are all almost done with today's topic with payments. Okay. But any questions so far? Okay. So this is a McKinsey report about global payment revenues, which they dipped in 2020 for a number of reasons, but they still expect it to grow in 2021, and then it'll grow about 7%. Okay. So payment revenues, that is revenue made about the whole payment, the fees you collected, is 1.9 trillion, a 5% decline from 2019, but a 7% growth. Yeah. So this is between LATAM, EMEA, North America, and APAC. Yeah. And this is the growth that we see. That we're seeing that APAC is going to see the maximum growth, North America, then EMEA in the next 5 years. Last few years, the growth has been accelerating again, Asia Pac. Yeah. So this is the global payments. And if you look at this whole payment pool, right? If you look at it across commercial and consumer, you have APAC, North America, EMEA, and Latin America. Again, APAC, 100 is basically a billion. Yeah. So Asia Pac is dominating it. So commercial is basically cross-border transactions, account liquidity, domestic transactions, credit cards, and consumer is cross-border, account related, domestic, and credit cards. Yeah. So you see there's the breakup. Yeah. So this is how payments are happening. You obviously Asia Pac is dominating as of 2020. So because of pandemic, there's been a big shift, declining cash usage, migration from in-store to online commerce, adoption of instant payments. Yeah. I think that's intuitive, right? All of us are probably using less cash, not going to ATMs, buying a lot of online stuff, instant payments, especially in India. Yeah. But this shift are creating new opportunities for payment players, but it's not clear which shift will remain permanent. Yeah. Especially the pandemic is not very clear. But one thing is clear, cash payments declined 16%. Okay. So cash payments are coming down, though cash usage will rebound, but cash payments have come down. So what is happening? Because there's less cash demand, banks are spending more on the ATMs, right? The unit cost for servicing an ATM is going up. So they're looking at ATM footprints and looking at how they're managing the cash recycle. Yeah. Many of them have decided to hand over the ATM management to others who are managing the cash in transit place, particularly in the Americas. Yeah. Regulators are seeing dramatic reductions in cash, are preparing to see how to bring in central bank currency. And this is what we'll see in tomorrow's topic in crypto is central bank digital currencies are emerging. Okay. So these are currencies which are generated by the central bank, primarily for wholesale use, but maybe for consumer use, mainly for the commercial banks. So retailers are also because of the commerce are moving from card and consumer to engaging with the customer, leveraging payment solution like we saw BNPL, So one of the large e-commerce players owns online payments network, has built a e-commerce ecosystem for marketplace, payment, shipping, software, and advertising, right? So people are trying to get the maximum revenue from building these systems. Okay. And customer experience is very important. People are spending on user experience. Okay. So there are competition to the banks, yeah, because banks used to do all the payments, but now payments, we saw a lot of these payments companies, right, in the fintechs, they're challenging the banks from remittances and actual retail and customer payments. New methods are coming, new digital wallet, real-time payments. We are seeing, right, in India, new applications capitalizing on the payment infrastructure, phone pay, Google Pay in India, Pay Now in Singapore. Even the big regional solutions are now trying to modify global network like Visa and MasterCard, competing with domestic schemes. Europeans are building a Euro payment initiative. US is launching a new clearing and settlement system. Even the Federal Reserve is starting a new FedNow service in 2023. Yeah, so a lot of rapid change happening in the whole payment method, payment usage, payment technology. Yeah, yeah. Let's look at India payment systems, right? You see the evolution from 2010 to 20. So you had about 6 systems, yeah, NEFT, MICR, which is check, ECS, RTGS, electronic clearing cards. And now you have RTGS, NEFT, but you have your National Automated Clearing House, IMS, which is immediate payments, UPI, we talked about, toll collection, Bharat Bill Pay, Rupee payments using the debit cards, prepayment instructions, RTGS. So there's a dramatic change in the Indian payment systems. And also from a share of payment, these are all from the RBI report. So the volume, right? If you look at it, paper was 60% in 2010 and 11, retail was 18, and then card payments was 22. And now paper is only 3%. Okay. Cash is not, 61 is retail electronic, card payments and prepayment instructions. And value-wise, paper used to be 89% and 10% was retail electronic and card payments was this. And now it is, paper is only 20%, retail electronic is 75, card payments and PPIs. Okay. Dramatic change in the whole payment methods, payment technologies. And we see what has happened, right? New, the retail digital space, right? Previously, these were the NPCI. NPCI is the National Payment Corporation of India, which is responsible for a lot of this innovation. Yeah. So we are seeing that things have started slowly. And in 2016, we saw UPI, Bharat Bill Pay, toll collection, BHIM. Then we had QR, Rupee, UPI, and then you have Rupee, Bharat Bill Pay, NETC, right? So new retail products have come in. Yeah, all of us probably are using the FASTag, right? The FASTag for if you're traveling by car, right? So dramatic changes in the whole retail payments. And it's also the same thing in India. There's big change in telecom, phone, and broadband, right? So wireless has gone up to 115 crores. Wireline, there is a fixed line is coming down dramatically. Yeah, it's come down from almost 120 crores has come down to about 70 crores, and broadband subscribers from 40 crores has gone up to 71 crores, and fixed line is steadily growing up, not big change. And card usage, you see the cash withdrawals has come down to 55%, card payments is 45%. Okay, and by value, credit card volume is it's about 200,000 crore. Debit card is a lot more there, yeah. And yeah, so card payments as debit card and credit card is huge, yeah. And the rapid payments, IMPS and UPI, right? You see the dramatic change, right? We've seen that the right hand side is the value, and then so right hand side is for IMS value, which is 120,000 crores. I think this is 2019-20. It has gone up a lot more. The UPI volume is like 125 lakh. I think it's in crores, yeah. But basically, you can see the steep jump from 2016, right? Everyone is using IMPS or UPI, right? UPI has become the thing for fast payments. And likewise, you're seeing, the different modes of payments, right? ECS, AMPS, NACH, UPI, credit card, debit, e-money, RTGS. Yeah. And suddenly you see IMPS is big, UPI is big. All these are overtaken the other methods of payments, digital payments. Yeah. So that is really about it on payments. So you can see that, the transformation in banking and payments because of technology changes. We saw telecom, mobile, and in banking because of the open architecture, open banking, APIs, microservices, all that has happened rapidly. And we are seeing open banking and the big dramatic change, which is helping fintechs also making all the banks do a transformation. Yeah. So that's really we come to the logical end for today's session. I'm hoping for any questions. I think we have a few minutes, but otherwise we probably are finished with this topic. And any questions you have today or tomorrow, we can continue. Yep. Okay. Any questions? Okay. So thank you, everyone. And we will reconvene. We'll look at cryptocurrency and digital assets in tomorrow's session at 2 p.m. Yeah.
Thank you, sir.
Yeah. Thank you, everyone. Stay safe.
So
I think
for sharing your, such a great content, such a informative things with the audience. And thank you all the participants for joining us. And I'm sure this session was very informative with a lot of examples and the data that was shared by the sir. And it is going to be very, very helpful. And once again, I would like to remind about tomorrow's session that instead of morning session, we'll be having afternoon, that is 2 to 4, and in the evening session, that will be concluding session. Thank you.
thank you, everyone. Good night.
See you tomorrow. Okay. Thank you, sir.